So in this video, we want to talk about slowing down, and I want to make it clear to traders that follow me, traders that are trying to become better traders, that it's important that you get beyond the noise and that you find a way to slow down. And I'm going to give you the secret. The way to slow down is to have a very tight CTS score, combined technical score, and only take the best of the best trades. Okay. And I understand how exciting it can be when you're seeing people post these different results and talking about they made X amount of money a day. I get it. Chances are that's really not true unless you know them personally and that they can verify that to you. So all you can do is look out for yourself. So let's see what it would look like if you just were able to slow down. Okay. So in the same fashion, oops, sorry about that. The same line we've been walking. Okay. Bearish engulfing candle, doji, reversal. Okay. So bearish engulfing, doji, indecision, reversal, and then trigger bar. And understand, this is going back to May 12th to where we are now. And you'll get a chance to watch how you could have eliminated 98% of the things that you did from mid-May to now, which is mid to late June. So trigger bar up here, an entry. Trigger bar right here, an entry. Right as soon as you identify that, you would go right into your targets. You see that this is a trend, the pullback, you're entering in the middle. Remember, when you're entering in the middle on a pullback, your targets are using the extension. So you're going to grab the extension. The extension is always going to be a 127 extension from the low to the high. You would then plot your target, use a tool. You guys have seen this before. You don't have to break or modify this rule. So entering right there, target the 127, stops right up underneath the low. Okay. No risk at all on this one. Trade enters, dances around a little bit, comes up, gets close, comes down, gets you at target. Winner. Most importantly, this is a 1-9, almost a 2-1. So I want to throw that in there real quick. You need, some people say 1-1, but 1-1 doesn't work. The math to be profitable on using a 1-1 strategy doesn't work, because those trades that you take that don't hit target, they come into play. This is all math. The ones that you take early that don't hit target, those come into play. So the minimum on the risk versus reward needs to be like a 1 to 125, meaning a little bit more than a 1-1. So if it's 1-1 and you keep a real tight rule set and your risk versus reward is a part of your combined technical score, because you want to be scoring, you want the ones that are 10 or higher, or however your scoring system works, a 1-1 doesn't even really work. It's got to be like 1.25 to 1. In this case, this one's almost 2. So that's one opportunity. That would have been one trade. I wish I could say how much money a trader could have made on that, but it depends on their lot size on it. Okay, that's one. Moving on to number 2 right here. It's going to be rinse and repeat. Okay. Identifying bearish engulfing. With a beautiful doji. Beautiful, perfect doji in your bias, white up in this case, because I'm not using green and white. And then trigger bar, this setup is kind of perfect. This one's almost too perfect. But that's why, and for the sake of edification, you want to wait for the best of the best. Okay. We didn't get away from advanced pattern recognition. You'll see in just a second, because I'm going to bring that in here right now. Now, remember, when you're at the bottom of structure and not trending, right? You're not doing a pullback. When you're basically at the beginning, it's going to be based off Fibonacci, swing high to swing low. Retracement, swing high to swing low. Grab your profit loss tool, plot it at your entry. Look for the 618. Put the stop right under the price action, under the structure. This one is a 1.5, okay? 1.5 to 1, okay? So that's going to meet the CTS requirement. Mind you, you would have came up through it. You can't worry about the extra change that's on the top because he came out of it, meaning you won. You did your job. Same thing on the first one. On the first one, price action came up. It was done. You should be asking yourself, why are these things happening at these levels? Like the 127 extensions, because it's a major extension. It's an extension that correlates with the 618 retracement. You should ask yourself that why when I show you, why do I use the 618? Because you have the evidence to show you that usually after a 618 retracement, a decision is going to be made in the market. Okay. So once again, I said that I wasn't going to leave advanced pattern recognition. I'm going to leave all the junk in here. But because we have this ability to see these things whenever, however, wherever, we'll put them in here and we'll talk about them. 786. Okay, cool. So not only, so this would have acted as another layer of confirmation. Okay, another layer of confirmation for the cipher pattern, bullish cipher pattern being filled. So I counted that as well, even though it's technically the same trade as the 3-bar reversal. This would have been using the 3-bar reversal to trade the cipher pattern. And you would have still been using the same targets from C to D or the high to the low 618. It'd be the same thing. Okay. So again, that could have been a person's whole month from May to June. And I can tell you there has not been another trade set up like those three. Okay. So as you're working through your charts and doing your charting, you want to slow down. You need 2 to 3 good winners a month. You don't need 10. Now, if there are more, if you're moving a lot faster and you got a lot more capital to play with, then yeah, by all means, take the trades, but let them be the best of the best. And you don't need any influence for you to do what I'm showing you. You don't need anybody showing you any results. You don't need any noise from a Discord. You don't need any of it. You have to quiet the noise in order to take something like this, deploy it, and to be successful with it, applying maximum discipline to it. This would be a month where that account absolutely grew with no losses. Granted, it's only 2 trades. Sometimes you might only have to take 2 trades a month. Now there'd probably be more because this is EuroCAD. This is what you would consider a minor pair in the Forex market. You might have some opportunities that jump up in the majors, the dollar pairs. You might like to trade exotics. You might have 3 or 4 stocks that you like to trade every day. You might like to trade crypto. Either way, this doesn't change. It doesn't. Okay. So just wanted to come out there, add some more trade psychology, and wish you guys the best. If you like this video, give it a thumbs up. I'm pretty sure some people could use that. The training that's went in there. Subscribe to the channel if you're not subscribed. Hit the bell icon so you can be notified. I appreciate your subscription if you can subscribe. That being said, you guys take care of yourself, be safe in the market, and I will see you in the next video.